This conference will now be recorded.
Good morning, everyone. This is me, Ali, and I'm representing APFX. Guys, first of all, a very warm welcome to all of you in this webinar. It's just like that we are meeting again after a year. Our previous webinar is in 2018, and now we are in 2019. Excited for that. So, speaking about the webinar, today we are going to talk about top 5 trade setups that are worth trading this month. Who's up for the trading? So as we decided, we are going to have like 4 webinars a week. 2 are going to be for newbies and 2 are going to be for professional traders. So what we are going to do today is I have spotted like 5 trade setups that are extremely important from trading point of view, and we are going to take a long-term view of these currency pairs. But before that, once again, guys, thank you so much for being here with us in BFX, and I really hope that you are getting things clearly. However, in case at any point in time, if you face any issue or if you have any problem or if you want an answer to something, please feel free to share your questions in the chat box below. All right, so moving on towards webinar outline. Guys, our agenda is likely to be the Euro USD. We are going to talk about Euro US dollar, and then we are going to take a look on their economic events. Then we are going to talk about the trade setup that I have been looking upon. And after that, we are going to talk about the Bitcoin, like what to expect from BTC USD, and the forecast from the technical aspects. Thirdly, we are going to talk about WTI crude oil, what's going on with the market and why it's being falling so sharply. And we are going to see what to expect from crude oil in 2019, or at least in the first quarter of 2019. Then we are going to talk about USD and Canadian dollar. Definitely, we can't skip Canadian dollar when we are speaking about the crude oil. I will let you know the reason, but before that, we are also going to cover GBP USD today. So by the end of this session, you guys will be allowed to ask the questions. So just feel free to share your questions with me in the chat box. So let's move on towards the Euro US dollar. What I have is I got Euro USD chart for you guys. Here we go. All right. So taking a look on the Euro US dollar, up it looks like I have to sign in, but I don't want to sign in here.
This conference will now be recorded.
All right, fellas, we are speaking about Euro USD. What I'm going to do right now is I'm going to highlight the pinpoints regarding Euro US dollar. The very first thing that we are looking for in 2019 regarding Euro US dollar is the ECB interest rate decision. Everyone is looking upon a European Central Bank, and they are expecting and trying to predict what outcomes are going to be there in 2019. But the thing is that back in December 2018, they just concluded their quantitative easing program. Uh, Fellas, let me tell you that the ECB was increasing the supply of money with the help of 2 instruments. The number one instrument is quantitative easing. The second instrument was interest rate. All right, speaking about quantitative easing means that it's an untraditional way of increasing the supply of money in the market. How we do that? Basically, Q stands for quantitative easing. Easing means that we are relaxing something. We are accommodating our economy, right? So ECB was accommodating their economy for 2 reasons. As you know, the interest rate of ECB, like European Central Bank, just cut their interest rates, and they put that in not only to 0%, but also they were dropped it as low as 0%, which means that which means that you are not liable to pay anything, like that gives us that sentiment. However, like if we speak about the commercial banks, they do charge markup, but the thing is that ECB minimum bid rate was stuck at 0.0% lately. So when we speak about banking sector, and if you want to know how it works, let me help you with it. Like, this is a bank. How bank works actually: bank take deposits and then lend it to borrowers. Okay, now speaking about how this helps bank. Like, bank is, when bank is taking deposit, it will be charging, like saying I will be charging 10% interest rate per annum, while when it is lending into borrower, it says that I will be charging like 15% of interest rate on your borrowing. And as soon as this gives a 10%, 12 15% interest rate to bank, they return the principal plus 10% interest rate to the depositor. So this is how the normal structure works. Now let me repeat myself when I speak about the bank taking money from depositors, uh, because and people were keeping their funds in the banks because they were feeling that, okay, there is going to be like 10% interest rate on our deposits, so that's a good option. Rather than keeping it in our safe or in our pockets, it's better to keep it in the bank, because this will be giving us 10% interest rate. But now, as you know, ECB like used interest rate tool to increase the supply of money supply. How it worked and how it is impacting the market right now: they reduce their interest rate near to zero, right? So when they reduce their interest rate, like when ECB say that the interest rate is likely to be 0.0%, which means that the bank won't be giving a very high interest rate, because banks are like, all of the commercial banks are liable to follow the European Central Bank, since it's a central bank, right? Because if they don't follow central bank, they will be deregularized. They will not be bank anymore. So which means that if that there is a 0.0% interest rate, these banks won't be able to pay higher interest rate, or they won't be able to charge higher interest rate from the borrower as well. So if they are not charging higher interest rate from borrower, how they can pay higher interest rate to depositors? Now here's the game. If I'm not getting paid enough interest or profit on my funds, I will never be motivated to deposit my funds in the bank. I will try to use them in my business, or maybe I will try to use them for my day-to-day expenses, or I will say, okay, this is like $50,000, and I would like to buy a new car, right? So this is how it works. If money is not going to bank, how bank can pay? Or but the borrowers are going to bank, how bank is likely to pay them funds as a loan? There is no way, because usually bank receive funds and they lend it to other borrowers. This is a exchange. It's an intermediary party. But right now, the situation is that the bank is not receiving funds, and there are still borrowers. So, in order to accommodate this situation, like European Central Bank launched their quantitative easing program. The quantitative easing program means that they are going to buy the asset-backed securities, which means that these are such as corporate bonds, are the bonds. These are the asset-backed securities, which means that these particular corporate bonds are backed by some asset in the corporation. So they started buying QE, like asset-backed securities, and this way they like when they purchased these asset-backed securities, they started pumping money supply in the market, because what they're doing right now is they are purchasing their bonds, and they are like injecting money supply against it. So in case you are getting confused with this, let me give you a very quick example from our real life. You must be investing in the government bonds. Like, the government issues bonds, price bonds, and then we purchase price bonds, and this is one of the way to capture money supply from the market. Whenever market is like, whenever the interest rate is you will feel that whenever inflation rate is rising, whenever economy is not growing, or maybe you can say that whenever central bank wants to increase the money supply, they start buying back corporate bonds from the market. Otherwise, if they want to increase the supply of money in the market, they will start buying the corporate bonds. Otherwise, they will start selling the corporate bonds in the market if they want to reduce the money supply in the market. So here they wanted to increase the supply of money in the market in order to accommodate the banks. So what they did is they started buying asset purchase securities, which means that by doing that they were injecting the supply of money in the market, and that money was going to borrowers. For now, as we know, the Federal Reserve is hiking the interest rate, and every other economy is looking for an appropriate point to end the loose monetary policy and go for like hawkish monetary policy or contractionary monetary policy. So in a way to do that, ECB has its own style. Like they just concluded their quantitative easing program. They are not injecting money supply with the help of this program anymore. Now their focus is likely to be like in 2019. Their focus is likely to be when to hike the interest rate, because 0.0% interest rate is nothing. So they definitely will hike the interest rate, just like their competitor banks like Federal Reserve and the Bank of England. Bank of England also hiked the interest rate once in 2018 from 0.50% to 0.75%, but that is still not enough, right? So speaking about the ECB,
This conference will now be recorded.
so in 2019, the outlook of ECB looks a bit bearish, a bit bullish. I will not say that they are dovish, but I am expecting that they will be bullish in nature in 2019.
This conference will now be recorded.
So let's move on and take a look at the technical side of the market right now. Fellas, here's a like technical chart of the market. Like I'm looking at the monthly chart right now, and in a monthly chart, there's a very interesting scenario. For instance, if you take a look at the monthly chart starting from 2014 and until 2018, like the previous month.
This conference will now be recorded.
And fellas, so looking at the monthly chart of Euro US dollar, uh, let's take a look at what's going on. Let me remove these indicators because these are some indicators that I use in the lower time frame. But for the bigger time frame, I would like to show you that starting from 2014 and until 2018, we have seen change in the trend of the market. For instance, right now, uh, and if
This
we
conference will
look at
now be
the
recorded.
fellows, I assume that you must be facing some communication issues. I'm not sure whether this is right or wrong, but the thing is, the software is showing that there must be some lags in the communication. Anyways, all right, thank you so much for confirmation. Looks like everything is fine. So I was saying that if we apply the Fibonacci retracement here, you can see that the Euro USD has completed like almost 61% retracement here from this point to this point. This is a low actually. From this point to this point, the pair has already completed somewhere around 61.8% retracement, which is like representing that the market is exhausted, like bulls are exhausted and bears may be entering the market right now. So for the moment, on the lower time frame, this bullish trend, like after the reversal of this bullish trend, we need to apply Fibonacci resistance on this small upward trend. And while we do so, you can also find that the pair has also completed um, like 60 or something around like 61.8% retracement above 1.12 to 5, which means that, and more interesting thing is that pair has not only completed the 61.8% retracement, but also it has formed a doji pattern right above this particular support area. So after the doji pattern, there is a bullish engulfing pattern. So these bullish engulfing patterns are suggesting that there is likely to be a bullish trend in the market. But right now there has been a like massive sell-off in the market. We can't say much, but the thing is that above 1.1240 market is likely to continue its bullish trend, and like at least towards 1.17, and then the violation of 1.7 can lead it towards 1.20. However, on the lower side, the violation of 1.1240, sorry, 25 can lead Euro USD prices towards 1.0800. All right, so I guess that's pretty much it about Euro USD. Speaking about WTI crude oil. Yes, WTI crude oil has been bearish for multiple reasons. Like as you know, there's a trade war between the US and China. Like USA has implemented like 10% tariff on 250 billion worth of products coming from Chinese markets, and very soon they are likely to increase this tariff rate to 25%, which is quite insane, right? So if that happens, like already based upon the sentiments, market has taken a bearish reversal, as you can see here on the monthly time frame 1, 2, and 3. There are three massive bearish candles which are signifying a strong bearish reversal in the crude oil prices. Technically speaking, we know about the fundamentals right now. I'm not going to emphasize on it because we also spoke about we already have like full-fledged webinar on why crude oil prices are falling down. Like there's a rate hike, like Federal Reserve hiked interest rate, stronger dollar makes commodities bearish because of their negative correlation. And then if we speak about the Chinese market, trade war sentiment is impacting like massively on the crude oil prices. Thirdly, the trade war is also impacting the manufacturing figures which are coming from the Chinese markets, and these manufacturing figures are getting worse and worse, which is quite like one can easily understand that this trade war sentiment is impacting the Chinese demand for the products, Chinese production, and also in response the Chinese demand for crude oil is falling. So that being said, looking at the like technical side of the market, 1, 2, and 3, these three candles are representing three black crows. These are three black rows, which means that the bearish trend has been started, and we may see a continuation of a bearish trend. Let me tell you the about the support levels. For instance, the immediate support is likely to be somewhere around 44.65, uh, or you can say 43.65. because as you can see that the early like lately market has been facing a very strong support above these levels, but right now the violation of this level can extend bearish reversal until 38 level, and even below this market can go after 32.84. So here 32.84 is a pretty strong level from trading point of view, because this is a level where I would be looking to take some buying positions. uh, and the reason definitely is because of the this is going to become like a triple bottom level, and somewhere like here we can expect a bullish reversal in crude oil, but until this level is met, we the sentiment is likely to be bearish. All right, fellows, speaking about USD Canadian dollar, when we speak about the crude oil has a very huge uh, and very strong correlation with the with Canadian dollar, and the reason behind this is because like 75% of like crude oil that Canadian economy exports goes to US economy, which means that crude oil exports are one of the product that is like that contributes towards the foreign exchange reserves of the Canadian dollar. That is one of the major product that they are exporting to the United States. So crude oil shares a big percentage in the total exports of the Canadian market. So whenever crude oil prices falls down, this also heavily impacts the demand for Canadian dollar. For example, if Canadian companies like if Canadian companies were, if the crude oil was selling at $80 a barrel, and it means that the Canadian companies was getting $80 per barrel for selling one barrel, and for selling 10 barrels they were like getting 800, right? All right, here's the thing. Right now the crude oil prices has dropped down from $80 per barrel to somewhere around $40 per barrel. So which means that earlier they was getting 800, but right now they are getting only 400. There's a 50% drop in their revenue margins. So which is heavily impacting the crude oil economy. So that is the reason why we are seeing a massive upward trend in the market. Canadian dollar is getting weaker, and the immediate support that I can find um, here is, speaking about the resistance, first of all, here's an immediate resistance right now, but the point here is these particular three bullish engulfing candles, like one bullish engulfing, second bullish candle, and the third bullish engulfing candle. These are representing a very strong sentiment of very strong buying sentiment of investors, right? And then this means that the continuation of a bullish trend can lead the USD Canadian dollar towards 1.3995, while the violation of this level can extend bullish trend up to 1.4290.